Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as we resume the trading session post the festive season, uh, there is once again a little bit of consolidation and a range bound move on the markets. After yesterday's Muhurat trading, whatever gains we saw yesterday, this morning as I speak to you at around about 11:15, we have lost all those grounds. To give you certain levels on the Sensex, Nifty Bank, rupee dollar equation and crude oil, well, Sensex is down about 380 points and the level is 64,880. Nifty is down about 100 points, 19,420 is the level on Nifty. Nifty Bank down about 250 odd points, 43,740. On the rupee dollar equation, 5 paise strength on the rupee against the dollar, and the level is 83.30 with 0.05 paise strength on the rupee against the dollar. Crude oil, well, this is where the positivity is. After seeing almost about $90+ on Brent and NYMEX, as of this morning, we have seen a downtick on both Brent and NYMEX. $80.60 to a barrel is Brent. NYMEX is trading at about $73.40 a barrel. This downtick is especially post the data points that emerged from the US in terms of inventories, and of course a little bit of lower demand in terms of global crude oil demand. One can only expect that we see much more lower levels as far as crude oil is concerned, depending upon what news flows comes in from the situation in Middle East. 35+ days are over with the unfortunate incidents that happened in Israel and of course Hamas. Situation is still fragile, let's face it, and there are international pressures put in place to have a certain kind of resolution sooner rather than later, but looks to be a very complex situation. One will have to only react to the news flows that emerge out of the current situation in the Middle East between Israel and of course Hamas. Depending upon those news flows, our sense is that the crude oil will also react, but let's hope that there is no any serious impact or negative news flow as far as crude oil supply is concerned. On the domestic side, friends, this week we will see season's end for the second quarter earnings, curtains down. And to sum up the second quarter earnings, well, there is no negative surprise. There is no black spots. There are no black spots rather, and there are no red flags. This is a positive. Expectation of the third and the fourth quarter to be a little bit better than this is very high. But again, it will depend upon what happens in the local and global arena in terms of news flows, and possibly we will follow those accordingly. But it has been a decent Q2 earnings season with positivities in terms of expectation. We have seen that the markets move in a range. And before I go there, tomorrow being Tuesday 14th of November is a holiday, so we have a truncated week. We'll get back to trade on Wednesday morning, that is on 15th November, and possibly react to the news flows. And our sense is that once again, like in the month of August, we were in a range. We have once again gone into a range, and the near term, depending upon the current situation that we are in. On the Nifty spot, to give you a larger perspective, the levels on the lower side could be restricted to 19,200, 19,300. And on the higher side, where we have been very recently, that is yesterday or maybe a little bit before that, 19,400 to 19,500. Now these two range will play out for a while. A reason being lack of news flows from the global arena. Reason being lack of clarity in terms of what is the outcome of the 5 state elections, which will have clarity in possibly first week of December, when we will have the clarity in terms of which political party stands where in which state. Unless and until we have that clarity, our sense is that this range on the Nifty, that is 19,200, 300 on the lower side and 19,400, 500 on the higher side, will stay intact. But during this time, friends, our sense is that and not to forget, even otherwise, despite of the indices being in a range, stock specific and sector specific moves, there are lots in the market, depending upon, again, the news flow. And we are also of a belief that this sector and stock specific news flows will continue, despite the fact that the indices will be in a range, like we mentioned, 19,200, 19,300 on the lower side and 19,400, 19,500 being on the higher side. Provided we don't break down or break out, consolidation is always good, like we did see in month of August. And entire month of August was stuck in a range. Moment we broke out of the higher range, we actually sprinted towards the all-time high in a matter of time. So maybe a similar reflection could be on the cards, given the consolidation range and the time that we will spend. So let's hope that we don't break down, and at the same time, let's hope that we have the strength and courage to make a base and then give a breakout. But during this time, friends, it's always opportunity. There is always an opportunity to build portfolios from a long-term perspective, and at the same time, remove those underperformance stocks from your portfolio and possibly focus into stronger performing stocks which are already there in your portfolio, or gather some courage, some strength, some understanding about the markets, and look at opportunities that are there. And every time that we speak to you, every week, we give out 2 investment opportunities. This time we have one stock from the large cap public sector bank post the earnings, and of course one mid cap capital goods engineering stock again post the earnings. The reason why it is necessary, because targets on fallback of earnings have got revised. So the first one is, and again here the opportunity is fantastic because the downside looks extremely limited, and the name of the stock is India's largest banking public sector name, State Bank of India. Numbers 1 or 2 parameters below expectation, but nothing negative, and the commentary from the management about improvement not only in the coming quarters, 3rd and 4th, but also in the next financial year. Credit offtake, loan book growth, and interest rate scenario augurs extremely well. And from where State Bank of India shares are trading currently, our sense is that the downside is extremely limited, and there is fantastic opportunity of at least about 20-25% plus kind of return over a longer period of time. So the first name is India's largest public sector bank, State Bank of India. The second name comes from the capital goods engineering space, and the order book of this particular company is diversified in 4 different verticals that they are into. And the name of the company is KEC International. Be it electrical, be it complex engineering, be it any other kind of form. This company has done fantastic over the last maybe about 1 year plus kind of time horizon, and it is in fact one of the outperforming mid cap capital goods and engineering stock. Our sense is that the orders from railways and from other verticals will grow exponentially. And the best part about this particular company is the experience and expertise of KEC International to execute the strong order book that they have. And the moment any capital goods engineering company has that capability of executing the order book, that transforms into earning visibility and it adds to the profitability. This stock is also a stock wherein the downside, according to us, looks to be limited, and maybe about 15 to 20 to 25% return on longer term time horizon is possible on KC International. Both these investment ideas, friends, are from a long term point of view. So you need to bear in mind that if you decide to get invested in these two names, you should have at least 12 to 18 months kind of time horizon, longer the better. Since these are fundamentally researched recommendation, these are not short term, medium term. So please bear this in mind and don't jump into it one time. Don't put all your money, don't invest all your money at one time. Staggered investment is always preferred in this kind of a market wherein we are going to be range bound. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of your health. Bye bye.